I'm in REITs headquarters in Washington, D.C., and I'm joined today by Stacy Schaus, Senior Vice President, Defined Contribution Practice Leader for PIMCO. Welcome, Stacy.
Thank you, Kurt.
Now, you just co-authored a paper having to do with how defined contribution plans can be structured in order to better mitigate risk and improve outcomes for participants. What type of structural changes do you believe plan sponsors should consider in order to improve outcomes for participants?
Well, there are a number of things that plan sponsors can do, and I can talk about three of them. First of all, we need to get people into the plans, and we need to have them saving at an appropriate level. Auto enrollment programs have helped that. In addition, having auto escalation where people are ramped up at a much more rapid rate will definitely help participants. So we might suggest defaulting in at 6%, for instance, and then going up at 2% a year until the participants reach 10% or a higher number. So that's one, is savings. Second is professional investment management, and fortunately with target date strategies and other asset allocation strategies, that opens the door for more professional investment management. Professional management could be by the plan sponsor, it could be a consultant, it could be an investment manager, but having that management where the decision on which assets, when to change assets is made by that professional is important. That opens the door for broader diversification, tips, commodities, other types of diversifying assets that are going to be important to the participants. And then third is risk management, and risk management can be accomplished through true risk factor diversified portfolios, but also looking at the risk of market shocks and how do we protect participants from market shocks. And that may be solved by, for instance, bringing in different risk hedging techniques.
PIMCO is a big believer in a real asset strategy, which includes healthy allocations to asset classes such as TIPS, commodities, and REITs. What's the rationale for this?
We are big believers in real assets, particularly for defined contribution plan participants, because as we know as individuals, as we approach and go into retirement, one of the greatest risks we face is inflation or the erosion of our own purchasing power. So we want to keep those dollars in pace with inflation, and so we're looking for assets that will keep pace, and there are a number of them that do. One is Treasury Inflation Protection Securities, or TIPS. A second that we believe helps is commodities. And then third, we also look at real estate. And I bring real estate into portfolios. Probably the best way is through REITs because they're liquid. So they're ideal for bringing into defined contribution plans.
Your paper includes target date fund asset allocation recommendations that feature meaningful allocations to REITs. What do REITs bring to the table by way of investment attributes that help participants in the accumulation phase when they're building their retirement account savings?
And that's right. We do have a very heavy allocation to REITs, particularly when people are younger. And that's because they add diversification, so especially relative to the equity factor risk that they have in their portfolio. So we would rather add real estate and reduce some of the U.S. equity exposure in place of that. And then second is the inflation protection that they provide. As the market or the economy starts to take off, we know the demand, for instance, for office space or other commercial properties is going to go up, so the value of those assets will go up as well. And then real estate also, to be able to buy it, we think the most effective way to do that is through a very liquid, daily traded instrument, and that's what the real estate investment trusts offer to defined contribution plans.
Now, if there's one thing that you would have plan sponsors take from your paper, what would that be?
Well, the paper is really looking at how do you engineer defined contribution strategies and particularly target date strategies in a new normal environment. And the new normal is one in which we have lower rates, continued or higher volatility, as well as continued unfortunate market shocks. So what we believe is you need professional investment oversight, broad asset diversification, and risk management. And that together, and that includes having assets, again, like TIPS, commodities, and REITs, should better position participants to reach their retirement goals. And that's what it's all about, making sure that we can help participants meet their retirement income needs.
Thanks again for joining us today, Stacy.
Thanks, Kurt.
For more on PIMCO's paper, please be sure to visit REIT.com. I'm Kurt Walton.